Most people shouldn't buy a home.
No one should buy a home.
Interesting. Which is the opposite of the American
Homes
dream.
were not built for people. Homes were built for banks.
This is why you're getting denied for a home loan, even though Credit Karma or your bank says you have a qualifying score.
I was in the military, I went to college, I worked, and we can't buy a home.
And once again, the cost for buying a house in America just got more expensive because guess how much credit reports are going up in 2024?
If you haven't seen it yet, you will soon, because every real estate agent, loan officer, and person in the industry is going to be telling you that credit score no longer matters.
So I had two buyers with FICO scores around 600. One loan was approved, one wasn't at first. So why? It came down to not their credit score, but their credit profile.
People aren't buying houses because interest rates are too high. This is the big lie about housing affordability.
We pay $2,000 a month consistently, on time, without fail, but a bank will tell us that we don't qualify to buy a house, that the mortgage is $1,500.
So for so long, I feel like past generations and people will always tell you a home is an asset, that you're wasting your money on rent, and that you could be building equity in a home and all of these things.
You know, these boomers have really screwed up our country and they really hurt young people.
The reason why you guys could afford houses was because
we worked our ass off and bought it.
Okay, but you're trying to say that we don't work.
Single family home with a white picket fence and 2.5 kids and a dog. Think about it. That is not an accident. Where did that dream come from? That dream is the result of decades of marketing.
We have not been in our home for almost a month, and the house has not sold.
The average millennial is 36 years old. They can't afford to buy the house.
If you only want to work 4 hours, it's going to be harder for you to get a house.
More millionaires are renting now than ever. And it's not because they can't afford it. It's because they choose to rent instead.
Everything that I'm seeing that has sold between $450,000 and $550,000.
I don't know if you were notified, but we're not going to be able to close tomorrow.
Why not?
Because the title company can't get a hold of the lender to balance numbers.
Oh, the lender told me he could fund tomorrow, no problem.
Hey, can I come see this house? Yeah, sure. You working with a realtor? Yeah, but he's out of town. You can show it to me, right? You want to sell the house? Sure, listing.
So first things first, this lead comes through Zillow. I give them a call and they tell me that they need to find a home within 2 months. They're already pre-qualified. So I'm like, great, this is going to be a piece of cake.
Listen, you're the real estate agent. You're a hired gun. Just because someone goes and buys gas with a stolen credit card doesn't mean the person who owns the gas station is liable. There's an apartment right over on West Broadway. A huge apartment. The deal was for $10 million.
I had been showing houses to my in-laws for almost 6 months, and they were working really hard. I was working really hard to find the right one.
This real estate agent just cost her buyers the house that they had under contract.
So we're going through the loan, everything's going great, we're nearing the finish line, and toward the very end, I ask if there are any additional addendums, meaning price adjustments that are documented, seller concessions that are documented, because I need to have that in order to finalize. Hey Mandy, it's Ann with the title company. You have a minute? Of course, what's going on? Well, you know how we made that special accommodation so that the Stevens could sign this morning?
I was really clear with everyone, including the listing agent, who I know because we've done business together in
A $50 million villa.
The kitchen's kind of small.
Okay, what about the pool?
I don't like it. The pool's kind of small.
Can I get this? No. Can I get this? No. Can I get this? Look, if you don't start misbehaving, that man over there is going to take you.
If you're applying for a mortgage this year, here are 5 things that lenders care about the most. As a former mortgage loan officer.
A debt management plan, one of them had one that was still active, the other one had one that had been satisfied for 12 months, there was missed payments on a current account.
Well, it's a dream for many Canadians trying to save up enough money for a down payment on their very first home.
A family of 5 who'd been renting an apartment thought they'd found the perfect home to buy, but now their deposit has gone missing.
Dorit is losing her house. I don't care. Someone sent me a death threat over this last week. How do you know this? Because I can read the signs and I have 2 eyes.
You know how there's sometimes things in life that just don't make sense? This is one of them. How do you buy a house that's worth $2.6 million? You get a $300,000 renovation loan, which is what it says, and you let it foreclose?
If you've had previous credit issues and you're convinced you won't be able to get a mortgage, this is for you.
My client was declined by 4 different lenders before he came to me. Now he's living in his dream home.
Being declined once, and now you think that's it.
So sorry to hear this, right? And you often hear me say there's 3 reasons why a property is either a massive success or a massive failure, right? That comes down to the agent, the pricing strategy, and the marketing. Get any one of those 3 things wrong, this happens.
A first-time home buyer had to claim bankruptcy because she borrowed her deposit from the wrong source. Guys, pay attention! When you are buying a property, the banks have changed the rules. They no longer allow you to borrow the money from anywhere. The deposit must come from a direct family member. And before you get tricky, they've already stipulated what a direct family member is.
Bad credit mortgages. So, yet again, we pulled it out of the bag. Speaking with the customer, been declined by multiple different brokers, multiple different lenders.
Yo, you're telling me that you're going to pay $239 million and this fucking railing is not going to be straight?
So I just wanted to give you a bit of an update on bad credit mortgages, following a couple of my videos, and to give you another example of a way that we can help. And this is based on a 90% loan to value mortgage, so putting down a 10% deposit.
I bought a house that I couldn't afford. I could afford it at the time, and then 3 months after I bought the house, I lost my job. And I have been hustling ever since.
So the buyer canceled because they didn't like their payment. Seems to me either the loan officer or the agent failed.
So the deal fell through, loan officer called me, and we had to pivot. We don't always lend our own money or use our own private money, but in certain situations, if the terms are right and both parties are happy, we can do it. In this scenario,
the whole thing has just collapsed. We have decided to pull our home too. I can't believe I'm actually saying that. We had a long emotional argument about what to do next. Option 1 would be continuing with our sale, finding somewhere to rent within the next 2 weeks.
When the lender went to go do the final credit pull, because yes, all lenders do this a few days before closing, the lender had actually seen that the client had took out an additional credit card to buy furniture for the new house that he was purchasing in a few days.
Have you been disqualified for a mortgage due to bad credit and no money for down payment?
You can't get a mortgage if you've had credit issues. Has to be the number 1 mortgage myth that we hear again and again.
So your breakdown of federal spending, I do think it's an indictment of a specific generation. I'm not going to name them boomers, but I think that generation, and the last year it was 1964, the year after the Kennedy assassination. They're on their way out. The youngest are 62. The oldest are 80.
No, everything's very expensive.
You're an idiot because you're living in a house paying all that rent.
Okay.
All right? All you got to do is you're paying more rent than you would a mortgage.
Okay, how am I going to get a mortgage?
Well, you save up your money and...
How? I'm paying the rent!
The bank created that product to sell money. You can't just loan people money. You need a product in between. The bank can't lend money for just money. Like, you need a reason to borrow money. Oh, you're starting a business. That's a reason, but it's really risky for the bank. Everybody should have a home, right? Oh man, that's pretty good. We should call it something like the American dream. Can't just call it a house, right? Everyone should have one, right? They got the politicians behind it. Yes, everyone should have one.
So that you can have a lendable credit profile. A bank's automated underwriting system reads your credit report, and if it's very thin, meaning it doesn't have all 5 components, or it has too much of like fixed payment loans.
By almost $400 plus the cost of what it is now. Lenders used to only get charged a couple bucks for a soft credit pull as opposed to a hard credit pull, which gives us all 3 bureaus and way more information. Now, FICO is charging us the exact same thing for a soft pull as a hard pull.
Fannie Mae just announced that the 620 minimum credit score is going to be removed from Desktop Underwriter. That is our automated underwriting system.
But we used our software, and that determined what they needed to do to get in a better position to get their loan approved. Our software is free. We use a soft credit pull so it doesn't affect your credit.
Interest rates are too high. No, they're not. Interest rates are at 6.5% right now. And yes, if you try to compare it to, 5 years ago when they were 3%, it seems really high.
And then a country that is trillions of dollars in debt will have the nerve to tell me that my credit score isn't good enough to buy said house.
To be clear, a home is not an asset unless the home is paid off. Okay? A home is debt with interest. And not only is it debt, for the most part, because I'm not going to buy the home that I want in cash, but not only is a home debt, but a home has so many unexpected expenses. Don't come at me and be like, no. I'm not going to be the one outside mowing my yard. I'm not going to be doing any of the upkeep.
Your wedding, it has become pretty commonplace right now. I don't care what your walk of life is, what your income is, what your savings levels are, what your background is growing up. Everybody wants these big, lavish affairs for their wedding day.
Some people might even call it propaganda, including from one of the most corrupt organizations in the world, the National Association of Realtors. They just had $1 billion+ judgment filed against them, by the way.
Right here, don't want to show too much of it. So that is where I still own the home, you guys. He is renting it back from me, and he's paying $1,000 a day.
We pay about $3,000 in rent. We have all of the utilities. We have car payments, car insurance, mouths to feed, and gas. Maybe we have enough left over for groceries and toiletries and household stuff. Why are we struggling? I'm not going to give up.
So therefore, their future self is poorer. If they think of how much of the stock market they can buy less with their money. They have less savings. They've got debts from university.
The real reason why many millennials cannot afford to have children or buy a home is because your generation effed up the economy and handed it to us on a not-so-silver platter.
I'm a homeowner, and there's so many hidden costs that no one ever tells you about. There's property tax, insurance, maintenance, and I probably spent around $12,000 on pipers and fixing my wooden floors just last year.
Some sellers are a little bit delusional on what their house is worth. I just talked to this guy and he told me he wants to list his house for $650,000. So I run a comprehensive report on everything that's sold in the neighborhood, and I let him know that everything that I'm seeing that has sold between $450,000 and $550,000.
Well, they can fund, but they have to respond to the title company to balance numbers.
Let me give him a call.
And then I just wanted to make sure, because, when we did the purchase agreement, the buyer's paying closing costs and commissions.
They're on what? Vacation. Guess I don't deserve that. And all you can say to me is, oh, well, don't you want to make the paycheck? Oh, you mean because we're in the multi-million-dollar price point, of which your agent's going to make close to the average household income for the year.
The severity of the situation, I do just want to give you guys some insight and just to give you some information on what to do when this happens to you guys if you're a realtor, and when to take a step back and know your worth.
The buyer, this is years ago, was really difficult. Wouldn't respond to texts, wouldn't respond to calls, and then would just randomly reach out to me. We eventually got to negotiate a contract. He brought a weird attorney in that was awful. Everything was an issue. And then when he finally signed the contract, he never sent a deposit.
The right house finally comes up. We go and see it. We write a full price offer. The only thing that the listing agent didn't like about the offer is that I was gifting my commissions to my in-laws.
Real estate agents, you cannot give a code out to a house that's not yours, okay? Simple as that.
So the realtor goes, yes, there is actually an addendum. I'm going to send it to you right now. The seller is going to credit the buyer, and we need to make sure that that's reflected on the closing docs. Well, it turns out I can't sign them. They showed up drunk. Drunk? Like, how drunk?
Right, well, let me show you something else.
Bro, just a normal water fountain. I went to chocolate.
Do you like the property?
Yeah.
Would you like to put an offer on it?
Yeah.
So making sure your credit score is as high as possible is going to get you into a bigger home. 2, debt to income ratio. Debt to income ratio is so important because it determines how much of a monthly payment you can afford based on what's on your credit report.
And there was missed payments on a credit building credit card as well. So yeah, loads of different factors to consider really.
Well, the family thought they were moving into their new house in May of this year, but there were delays, and now they can't find their $38,000 deposit. They also fear the person they were working with was not a licensed real estate agent.
You're not spending $5K at Love Shack Fancy, and then you can afford your $6 million home after. Sorry, I am intuitive. That's not my fault.
This Kim and her husband are worth a combined total of $8.5 million. And you're going to let a property worth $2.6 million foreclose over $300,000?
So on Friday, we had a lovely client complete on her purchase and pick her keys up and move into her new home. And 9 weeks ago, when she found us, she was convinced she wouldn't be able to get a mortgage.
This client came to me after being declined by 4 different lenders because he had a big defaulted account. It was over £10,000.
You applied, got declined, and now you think that's the end of it. So you stop trying, but one lender saying no doesn't mean all of them will. Different lenders have different criterias.
And yet they're supposed to be or position themselves as someone professional. And also, you've said that they're not communicating, or the communication has been really, really, really poor.
A mother, a father, a sister, a brother, or your children and grandparents, that's it. Best friends and boyfriends do not count. So this first-time home buyer went out, bought the property, went firm. On closing day, she couldn't get her mortgage. She had to walk away from the property. The seller had to put the property back on the market, got $150,000 less because the first buyer walked away. So the seller had to sell the property, lose $150,000, then had to go and sue the buyer for $150,000. But they're a first-time home buyer. They don't have $150,000, boom, bankruptcy.
They had an IVA, which was registered over 6 years ago. And then since then, they've had some sporadical mispayments on loans, credit cards, status 1, status 2s here and there. They'll come to us. We've looked at the credit report in depth.
They did fix the railing, but the house sold for way less than asking. Keep in mind, they spent the first 2 years working on this house just on excavation to make room for a 50-car garage and an above-ground swimming pool, which is trashy if you're poor, by the way.
So you could be in a position where that you've had a CCJ registered on your credit file for 50 grand, and it could be 3.5 years ago. You could have had a default on a loan 3 years ago, and then in the last 6 months, you could have had 3 defaults on any form of utilities or any form of communication bills that you might have.
Every single month, I work my butt off, working 2 to 3 jobs just to pay for this roof over my head.
Fast forward 3 business days, the earnest money deposit still isn't at escrow. Next thing you know, the listing agent, she gets a email saying the buyer's canceling because they don't like their payment. Well, number one, in our state, there's not a contingency for I don't like my payment.
This borrower was coming in with 30% down. For whatever reason, a conventional loan didn't work. We asked the customer or the borrower what the most important thing to them was. Like, do you still want to close? If you want to close, when? This guy insisted on closing on Monday.
Sounds sensible, as we would have all of the cash in our house, no chain, making the process a lot smoother when we find the next house. But it does come at the cost of paying 3 times what we do now, not eating away at our mortgage and paying into someone else's.
Because of that, the buyer's credit score had decreased. Also, the debt to income ratio had went over the limit, and then that caused the loan to get denied, and he wasn't able to get his new home.
We see people down in the 400s, but we can get them repaired. It just takes a little bit of time.
Okay, so what is the score that people typically need to get to be able to qualify for a mortgage?
We offer USDA and FHA loans down to 580. If you want down payment assistance, you need to have a 600.
So we had a guy come to us that 4 years ago, he had gone through a really rough patch. He got made redundant and he also separated within the same month. Things spiraled and he couldn't manage his finances anymore. So he did end up with quite a few defaults and CCJs on his credit file. Defaults were actually up to £40,000.
How did it give rise to that generation? They came back from the war and had those people. So like, I'm not again, I'm totally very anti-Nazi, want to be clear, but like, if that's the founding myth of our country, that winning that war was such a win, then how did they produce the baby boomers?
Or collections, it's going to issue a denial, even though previously you had some accounts that give you, for example, a 620 credit score. At Mortgage Credit Pro, we maximize all 5 areas that I previously talked about so that you can qualify for a home loan, making it through the automated underwriting system of that lender so that you can get your approval and get a home for you and your family.
How does this affect you? Personally, I think a lot of lenders aren't going to be as willing to do soft credit pulls and then credit advising for somebody who's not ready to buy.
Even reserves, money in the bank over and above what you owe at the closing table, are going to have more weight.
If you plan on applying for a mortgage, save this video, or if somebody you know is looking to apply, make sure you share this video with them. Don't forget to give me a follow for more credit and finance. At the very top, we have credit score. You can get approved for a mortgage with a low credit score, but your credit score will determine your interest rate. Your interest rate will determine how expensive your monthly payments are, and the amount of your monthly payments will directly impact your purchasing power.